What if the biggest silver rally in modern history has not even started yet? What if one single financial event could completely change the price of silver and shock the entire global market? According to precious metals expert Alasdair Macleod, the world may be moving toward a major monetary crisis that could send silver prices into territory very few investors are prepared for. Some analysts believe silver could rise hundreds or even thousands of percent if confidence in paper currencies begins to collapse. And now in 2026, more investors are starting to ask the same question: is the silver market about to explode? Welcome back to Pulse of Silver, the channel where we break down the biggest silver news, market warnings, and price predictions shaping the future of precious metals. Today's topic could be one of the most important discussions we've had on this channel because the signals coming from the global economy are becoming impossible to ignore. Rising debt, unstable currencies, central bank buying, inflation pressure, and growing distrust in financial systems are all pushing investors toward hard assets. And silver may be at the center of it all. A 4,000% rally sounds unbelievable at first. But when experts like Alasdair Macleod discuss this possibility, they are not talking about a normal market cycle. They are talking about a monetary reset scenario. In simple words, they believe the financial system itself could face serious stress. If that happens, silver may no longer trade like a normal industrial metal. Instead, it could become one of the most desired stores of value on Earth. To understand why this matters, we first need to understand how small the silver market actually is. Compared to global stock markets, bond markets, or even gold, silver is tiny. That means even a relatively small amount of money moving into silver could create massive price movements. Many investors also forget that silver has two powerful roles. It is both a precious metal and an industrial metal. Silver is used in solar panels, electric vehicles, electronics, medical technology, and military equipment. At the same time, it has been used as money for thousands of years. Now imagine what happens if industrial demand keeps rising while investors around the world suddenly rush to buy physical silver for protection. This is the exact kind of scenario Alasdair Macleod warns about. He believes the current financial system depends heavily on debt and confidence. But once confidence breaks, people begin looking for real assets they can trust. History shows that during times of financial panic, gold and silver often become safe havens. The interesting part is that silver usually moves later than gold, but when it finally starts rising, it often moves much faster. We saw this during previous bull markets. In the late 1970s, silver exploded from just a few dollars to nearly $50 per ounce in a very short period. In 2011, silver again surged close to $50 during economic uncertainty and aggressive money printing by central banks. But according to Macleod, the next move could be much bigger because today's global debt levels are far higher than they were in the past. Governments around the world continue printing money to support weak economies. Central banks keep buying gold at record levels. And ordinary people are starting to question whether paper currencies can hold their value long term. That is why many silver investors believe 2026 could become a turning point. Not because silver suddenly changed, but because the world around it is changing very fast. And if one major financial event breaks confidence in the system, silver may react in a way that surprises almost everyone. One of the biggest reasons analysts are becoming extremely bullish on silver is the growing weakness in global currencies. Around the world, governments are carrying massive debt levels that continue rising every year. The United States alone owes trillions of dollars, and the interest payments on that debt are becoming harder to manage. Europe faces economic pressure, China's growth has slowed, and many developing nations are struggling with inflation and currency weakness. According to Alasdair Macleod, this growing debt problem could eventually force central banks into a dangerous position where they have no choice but to create even more money. When central banks print money aggressively, currencies lose purchasing power over time. This is why everyday goods become more expensive. Food, housing, fuel, and energy prices rise while the value of savings slowly declines. Many people may not notice it immediately, but inflation acts like a hidden tax. And throughout history, precious metals have often protected wealth during these periods. Silver becomes especially interesting because it is still relatively affordable for average investors. Gold prices have already reached levels that many small investors struggle to buy. But silver remains accessible. That means if fear spreads through financial markets and millions of people decide to buy physical silver at the same time, the supply available could disappear very quickly. There is another important issue that Macleod frequently discusses: the difference between paper silver and physical silver. Most silver trading today happens on paper markets where contracts are traded instead of actual metal changing hands. Some analysts believe there are far more paper claims on silver than real silver available for delivery. If too many investors suddenly demand physical silver instead of paper contracts, it could create major stress in the market. This is where the idea of a historic silver squeeze begins to enter the conversation. If industrial demand remains strong while investment demand explodes, silver inventories could shrink rapidly. Mining production is also not growing fast enough to meet future demand projections. Opening new silver mines takes years, and many existing mines are already facing rising costs and lower ore quality. At the same time, green energy technologies continue increasing silver usage. Solar panels alone require huge amounts of silver because of its unmatched electrical conductivity. Electric vehicles, batteries, artificial intelligence systems, and advanced electronics all depend on silver in different ways. So even before a financial crisis arrives, the long-term supply-demand picture already looks very tight. Now imagine adding panic buying into this situation. Imagine large institutions, hedge funds, and ordinary investors all trying to secure physical silver at once. Prices would not move slowly. They could rise violently. That is why some analysts believe silver may eventually outperform nearly every other major asset during a monetary crisis. Alasdair Macleod also points to the growing loss of trust in governments and banks. Around the world, people are beginning to understand that financial systems are becoming more unstable. Banking failures, inflation shocks, geopolitical tensions, and rising interest rates are creating fear across markets. During uncertain times, investors often move toward assets with no counterparty risk. Physical silver fits that category because it is a tangible asset that cannot simply be printed into existence. For many silver supporters, this is not only about profit, it is about protection. They believe silver represents financial insurance against a system that may face serious pressure in the years ahead. And if confidence in currencies continues to fall, silver could become one of the most important assets of the decade. Another major reason behind the bullish silver outlook is the growing movement away from the US dollar in global trade. For decades, the dollar has been the world's dominant reserve currency. Countries used it for international trade, energy payments, and central bank reserves. But now, several nations are actively trying to reduce their dependence on the dollar system. This trend has accelerated in recent years, especially after sanctions, trade conflicts, and rising geopolitical tensions. Countries like China and Russia have been increasing their gold reserves while promoting trade agreements outside the dollar system. Nations within the BRICS alliance have also discussed alternatives for international payments. According to Alasdair Macleod, this shift matters because the strength of the current financial system depends heavily on global confidence in the dollar. If that confidence weakens, investors may begin moving toward hard assets much more aggressively. Gold is usually the first metal to benefit during monetary uncertainty, but silver often follows with even larger percentage gains. Historically, silver has been far more volatile than gold. That means when momentum enters the market, silver can rise very quickly. This is one reason why some analysts believe silver could deliver extraordinary returns during a major financial reset. Many silver investors closely watch the gold-to-silver ratio. This ratio measures how many ounces of silver it takes to buy 1 ounce of gold. Historically, the ratio has moved much lower during strong silver bull markets. Some investors believe the ratio today still shows silver is heavily undervalued compared to gold. If the ratio begins falling sharply while gold continues climbing, silver prices could move much faster than most people expect. At the same time, retail investors are becoming more educated about precious metals. Social media, financial podcasts, independent analysts, and online communities have created a new wave of interest in silver ownership. Unlike previous decades, information now spreads globally within minutes. If public excitement around silver starts growing during a financial crisis, millions of people could enter the market almost simultaneously. This creates another important issue. There may not be enough physical silver available for everyone who wants it. Dealers have already experienced shortages during periods of heavy buying in the past. Premiums on silver coins and bars sometimes rise dramatically when supply tightens. During major demand spikes, even large dealers struggle to keep inventory in stock. Mining companies also face growing challenges. Energy costs, environmental regulations, labor shortages, and political instability in mining regions continue affecting production. Since silver is often produced as a byproduct of other mining operations, increasing silver supply is not as simple as opening one new mine. This supply limitation becomes very important during periods of rising demand. Meanwhile, central banks continue buying gold at record levels. While they are not major silver buyers today, their actions send a clear signal to global markets. Governments themselves appear to be preparing for a world where trust in paper currencies becomes weaker. Many investors believe this trend supports the long-term case for both gold and silver. The most important point in Macleod's argument is psychological. Financial systems operate on confidence. Banks function because people trust them. Currencies hold value because people believe they will continue working tomorrow. But when that trust begins breaking, capital moves very quickly. And according to silver bulls, once fear replaces confidence, silver could become one of the most desired assets in the world. That does not mean prices will rise in a straight line. Silver remains highly volatile and can experience sharp corrections. But many analysts believe the long-term direction is becoming clearer as debt rises, currencies weaken, and global uncertainty continues growing. One question many viewers may ask is this: what specific event could actually trigger such a massive silver rally? According to Alasdair Macleod and other precious metals analysts, the answer may not be one single event, but a chain reaction of financial problems happening together. Sometimes markets appear stable on the surface, but underneath, pressure continues building for years. Then suddenly one event exposes the weakness of the entire system. A major banking crisis could become one possible trigger. We already saw signs of banking stress in recent years when several financial institutions faced liquidity problems. Governments and central banks stepped in to stabilize markets, but many investors noticed how fragile the system had become. If another larger banking crisis appears, confidence in paper assets could fall quickly. Another possible trigger is sovereign debt trouble. Governments around the world are carrying enormous debt burdens. Higher interest rates make that debt harder to manage because governments must pay more just to cover interest payments. If investors begin doubting whether certain nations can control their debt, bond markets could become unstable. And when bond markets shake, global financial systems often react violently. Inflation could also play a major role. Many people believed inflation would disappear quickly after the pandemic years, but prices in many sectors remain elevated. If inflation returns stronger while economies weaken, central banks may face a difficult choice. They could either raise rates and risk crashing economies, or print more money and risk currency weakness. Either path creates uncertainty, and uncertainty often benefits precious metals. At the same time, geopolitical tensions continue increasing across the world. Trade disputes, military conflicts, energy shortages, and supply chain disruptions are all adding stress to the global economy. Investors usually move towards safe assets during periods of instability. Silver and gold have historically benefited from this kind of environment. Some analysts even describe silver's future price movement as exponential rather than linear. In simple terms, they believe prices may rise slowly at first, then accelerate rapidly once momentum begins. This is because silver markets are relatively small compared to the amount of global capital searching for safety. A small shift in investor behavior could create a very large effect on price. Another important factor is public psychology. Most people ignore silver during normal times. They focus on stocks, real estate, or cryptocurrencies. But during crises, attention changes quickly. Fear causes investors to look for protection rather than speculation. When mainstream media begins talking about inflation, banking risks, or currency weakness every day, public interest in precious metals can grow extremely fast. This is exactly why many long-term silver investors continue accumulating physical silver even during market corrections. They believe the real opportunity appears before the crowd arrives. Once panic buying begins, prices and premiums could rise much faster than expected. Still, experienced analysts also warn viewers to stay realistic. A 4,000% rally is an extreme scenario connected to major monetary instability. It does not guarantee silver will reach those levels tomorrow or even within a specific timeline. Markets are unpredictable, and silver is known for dramatic price swings in both directions. But the reason this discussion matters is because the underlying conditions supporting silver today are very different from previous years. Rising debt, unstable currencies, strong industrial demand, tight supply, and growing investor awareness are all happening at the same time. And according to Alasdair Macleod, that combination could eventually create the perfect storm for silver prices. As we move deeper into 2026, one thing is becoming increasingly clear. The global financial system is entering a period of uncertainty unlike anything we have seen in decades. Investors around the world are searching for safety, stability, and assets they can trust during unpredictable times. According to Alasdair Macleod, silver may become one of the biggest winners if confidence in paper currencies and financial institutions continues weakening. The possibility of a 4,000% silver rally may sound extreme, but history shows that major monetary changes can produce extraordinary moves in precious metals. During times of panic, markets do not behave normally. Prices can rise far beyond what most people once thought possible. And because the silver market is relatively small, even a moderate increase in global investment demand could create powerful upward pressure on prices. At the same time, silver's industrial importance keeps growing. The world is becoming more dependent on technology, renewable energy, and advanced electronics. Solar energy expansion alone is increasing silver demand year after year. Electric vehicles, batteries, and artificial intelligence systems are adding even more pressure to an already tight supply chain. What makes silver unique is that it sits at the center of two powerful trends at once. On one side, it is a critical industrial metal needed for future technology. On the other side, it is a historical form of money that investors turn to during economic fear. Very few assets combine both qualities the way silver does. Still, viewers should remember that silver investing requires patience and emotional discipline. Silver prices can be extremely volatile. Sharp corrections, sudden rallies, and unpredictable market behavior are all normal in the precious metals sector. Long-term investors usually focus on the bigger picture rather than daily price swings. Many silver supporters believe we are still early in the cycle. They argue that most mainstream investors have not yet entered the silver market in a serious way. If global financial stress continues rising, that could eventually change. And if it does, silver may become one of the most talked about assets in the world. For now, the key question remains the same. Will the current financial system maintain stability, or are we moving toward a major monetary shift? According to analysts like Alasdair Macleod, the answer to that question could determine the future direction of silver prices for years to come. If you enjoyed this analysis, make sure to subscribe to Pulse of Silver and stay connected for more updates on silver markets, economic warnings, price predictions, and precious metals, news shaping the future of wealth preservation. The next few years could become one of the most important periods in modern financial history, and silver may be right at the center of it. This video is for educational and informational purposes only. Nothing discussed here should be considered financial advice, investment advice, or a guarantee of future results. Silver markets are highly volatile and involve risk. Always do your own research, study market conditions carefully, and speak with a licensed financial advisor before making any investment decisions.